Hold on one second. Oh, there we go. Just in time. Well, welcome to this afternoon's plenary session. Technology is the key to youth financial inclusion. I hope this is going to be an exciting and informative discussion. We'll shortly have about a 1-hour panel session with a diverse group of experts on youth and financial technology matters. Any of us that have kids today most likely recognize that the younger generation is growing up in a world that does not really think of technology as being something discrete. It's a fundamental aspect of their lives. Many of them do not even understand the concept of life without our modern technology tools. In the emerging markets, access to modern technology is still not universal, of course. In sub-Saharan Africa, smartphone adoption is only at about 36%. It's expecting to reach about 66% in 5 years' time. You can contrast that with Latin America at 65%, Middle East and North Africa at 52%, and APAC at about 54%. Here in Africa, even feature phones, however, are being used for financial services. Research conducted by the African Center for Economic Transformation showed that more people are using their mobile devices, whether it's a smartphone or a feature phone, for accessing financial services rather than using traditional retail bank branches or ATMs. In Zambia, 75% of respondents reported having phones and using them for financial services, 59% on smartphones and 41% on feature phones. So you can see it's fairly well split. It used to be the case that when you started your first job, the most desired item for you to purchase with that paycheck was a motorbike or some form of transportation. Now, that most desired first purchase is the mobile phone. And it's that is driving financial inclusion across the world. I would now like to invite to the stage the Governor of the Bank of Tanzania, Mr. Florence Luoga. Thank you.
Good afternoon. Yeah, let me first thank you for inviting me, Steve, and I'm honored to be the theme setter this afternoon, especially given the importance of the subject of discussion this afternoon. Let me start by saying that the youth are the present and the future. And the youth are both an asset and a challenge. Today, our responsibility or our obligation is to bridge the youth to the force that will build our economies and sustain development. In other words, they are indispensable. And if we ignore them, then they will assert their position in society. And they may assert their position when they are least prepared to take the responsibilities of steering development and governance in our countries. I would like to share with you a short an experience in Tanzania concerning the youth and what they are capable of doing and why we need to have them prepared. When Tanzania adopted the multi-party system, the political parties were led by the older people. And they used to tell the youth that you are for tomorrow, not today. So be patient, your time will come. So they couldn't contest for elections and all that because they were told their time is tomorrow. What the politicians did not consider is that demographically, the youth were becoming the larger voter group. They become young persons, and they are the majority of the voters. So what they did was to campaign for themselves, and when elections came, they voted for each other. So suddenly the parliament was full of young people, and the older politicians were displaced. And everybody started complaining that the youth are least prepared to take political leadership. But who should have prepared them? The lesson is that if we ignore the youth today, they will enter the system anyway. And the danger is that when they enter the system least prepared, they move in as a tide, and they can be destructive. But we can all prepare them and make sure that instead of being a destructive tide, they are an asset which is harnessed in order to make sure that they take their position in the society. They become part of the levers of economic development, who know what they need to achieve and how they should achieve. So today, when we talk of financial inclusion of the youth, we are talking of an imperative. It's not an option. It is an imperative. Either you give them access, and they know how to access, and they know how to make use of that access responsibly and in a way that pushes forward economic development. So it is a critical strategy to make sure that the youth are financially included. The challenge is, how do we do it? And this is where the importance of technology comes in. The tendency today is for our financial sector to look at the youth as a group of people who are highly risky. They are considered risky because very often majority of them may not have fixed abode. It's difficult to verify who they are and where they are. You cannot use the parameters we know of verifying whether the youth are credible or creditworthy, or otherwise you can trust them when you give them access. And you cannot even expect them to transact or deal with you using the tests we use. For instance, having collateral. There is no collateral when you are dealing with the youth. But technology makes it possible to make the youth visible, makes it possible to make the youth verifiable, makes it possible to communicate with the youth. Because the youth often fear to interact with the financial institutions because of the many requirements that financial institutions impose, because of the fear that entering the financial sector is exposing oneself to processes that are unknown. So while the banks fear the youth as well fear the banks. But with technology, it is possible to develop reciprocity of the confidences between these two very important players. Technology can allow access to financial services even if you don't meet, but makes it possible to know that the person you are dealing with can be trusted. Transactions can be visible. It means for us as regulators, we have the responsibility to create the necessary infrastructure in order to maximize the use of technology and financially include the youth, such that they become part of the force that takes the responsibility to develop economic activities and sustain developments in our countries. Honorable Moderator, I think my role was to set the pace thinking and at least to introduce the context in which we should discuss financial inclusion. And I believe we have experts who can do that better than I am. Thank you.
Okay, with no further ado, I'd like to invite the 5 panelists to the stage, please. Ariane, Jamie, Maynard, Jean-Baptiste, and Martin. I hope these are working. Yes, that's working well. Okay, well, I'm going to invite the panelists to introduce themselves, going down the line. Ariane, please, take it away.
Great. So my name is Ariane Moringa. I am the co-founder at Starlight. Starlight is an edtech startup based here in Kigali, and we make STEM products to inspire and engage people across Rwanda. And these are build your own STEM kit to spark their imagination and creativity. So we are all made in stars, and inside every young people is a rainbow waiting to shine. And inside every child is a scientist. So our kits are made to spark their creativity and imagination by also nurture their minds to be scientists as they grow up.
Thank you, Ariane. Jamie.
Good afternoon. My name is Jamie Zimmerman. I am a member of the Financial Services for the Poor team at the Bill and Melinda Gates Foundation. I lead our global partnerships and gender portfolios. In my past life, I worked a lot on youth financial inclusion, including a couple of articles, one that was written called Beyond the Buzz, the allure and challenge of using mobile phones to financially include youth, and in another one called Investing in Girls, about using digital financial services for women's empowerment for adolescent girls and young women. And so even though at the foundation we don't have an explicit focus on youth financial inclusion, this is something that is very near and dear to me. It's kind of like being reintroduced to an old flame after a few years. So I really appreciate getting to participate in the panel.
Thank you, Jamie. Maynard, I'll hand it to you.
Good afternoon. I'm Maynard Mojica from the Central Bank of the Philippines. Actually, I am here wearing 2 hats, one as a young central banker and another one also as a member of the youth sector. I am 29 years old, but I do not know that there's a cashless monopoly.
Good afternoon, everyone. My name is Jean-Baptiste Atiekimana. I represent the Rwanda Youth in Agribusiness Forum and the African Youth in Livestock, Fisheries and Aquaculture Incubators Network. Thank you.
My name is Martin Marioba. I'm here as a managing partner of Helpdesk Technology Consulting, a software development company focusing on various software projects, especially the platform that we'll be talking about today. In my previous life, I used to work with the Central Bank of Tanzania, and on the financial inclusion space, I've managed interoperability project in Tanzania. I've helped Uganda as well, and I'm currently working in East Africa cross-border payments interoperability project.
Thank you. Can I start with Ariane? First question. So from your experience teaching STEM to young people, how can policymakers enhance digital financial literacy among the youth?
Great. So from my own experience, there's this term of learning by doing, and I believe that this can be implemented in every teaching methodology and also in terms of financial literacy. So I can maybe summarize this in 3 ways. One, by setting up, allowing like youth to create solutions, and this would be in terms of them having access to digital banking, and this will be in terms of having this digital platform that will allow young people to end these like big stereotypes that banks are for older people that will restrict them to create bank accounts. So this digital platform will allow then the youth to manage whatever money they have, and this should be implemented at a very early age, in terms of even from that young child that is given pocket money from his parents, and from this young person to be able to manage this money at a very young age, and having his or her financial records in a certain system so that this can be also accessed in the future when grow up. This can be accessed by different financial institutions, and hence allowing them to gain access to loans or gain also trust.
Thank you. Jean-Baptiste, can I ask you to build on this? In your experience, and what financial services do the people that you're working with have access to, and which ones do they use?
Thank you very much, moderator. As a representative of young people engaged in agriculture in different parts of the value chain, financial access is key to spur their business, is key for investment, and is key also to mean the work they are doing, so that what they are doing can be a very productive job. But when we talk about financial inclusion, it's not easy for the young people to accept the current conditions on their ways of accessing finances, because as the previous speaker talked about it, banks are fearing to be approached by youth, and youth also fear to approach banks because of the conditions. But not only talking about the ways they are accessing finance, but what is missing. Youth should not be treated like threats when it comes to access to finance, but policy should be changed somehow to allow the access to finance in an easy way to the youth, but also youth as a fragile category of the people need also accompaniment. They need to be taught, they need to be accompanied, they need to be incubated. That's why different programs, including incubation programs and coaching and mentorship, could be also put in place in different domains of businesses that are attracting the young people, so that they can run the businesses and contribute efficiently to the economy. Thank you.
Perfect, thank you. Maynard, you're from the Philippines. Can you share with us the current state of access in your country for youth to digital financial services?
Thank you, Steve. But before I answer your question, let me take a step back and let me clarify first. When we talk about the youth, what are actually talking about? I mean, what age range? I know that for the United Nations, it has defined is someone aged 15 to 24 years old, but I think this will still vary per country to country. So for example, in the Philippines, we further segment it as to whether you are child youth, core youth, or young adult. And I'm not saying this just for purposes of taxonomy, but I related to the session earlier because the financial needs of a person will vary depending on the life cycle or the life stage. So imagine a 15 to 17-year-old teenager will have a different need from someone aged 25 to 30 who has already entered the workforce, and the financial need will vary. And I think this nuance is important if if we will need to be customer-centric in financial products, in the design of financial products and services. Now, to answer your question on the state of youth financial inclusion in the Philippines, actually we're following the global pattern wherein the young adults are less financially included than the older counterparts. And based on our demand-side survey, these are the main reasons why young people do not have an account, which is a basic measure of financial inclusion. So they're telling us that they don't have enough money, and which is related to the reason that they don't have work. So they don't have the financial resources to open an account. Then another major reason is they don't have the documentary requirements, especially the identification documents. And I think the legal requirement, the age requirement is also a barrier for some. Another reason is no need. They said that they lack need for financial services, but for us, this is just a perceived lack of need because based on the data, we found out that actually young adults have more savings. The incidence of saving is more common among young adults than their older counterparts, but they're just using informal mechanisms to save. So there's that need, but that is being met by informal financial services. And the last one would be awareness. Lack of knowledge in account opening, which leads to, I think, the need for financial literacy and increasing financial capability. So to address these barriers, what the central bank is doing is, provide an enabling environment. So for example, if the reason is you don't have enough money or you don't have work, so that's why you don't have the financial resources, we have youth, kiddie and teen savings account. I think this is very similar to what many AFI member countries are doing. So these are youth-friendly deposit products specifically designed to the capacity of these young people. So with opening amount of less than $2, no maintaining balance, and even if you are a minor, you can open this account. And in terms of access to credit, I agree with the Honorable Governor that many financial institutions perceive the young people as risky because they don't have the collateral. So in our case, microfinance has been a critical enabler of access to credit for young entrepreneurs, especially women entrepreneurs. So you can see there, actually the winner of our Youth Micro-Entrepreneurship Awards last year. So she's a midwife, and she's actually hosting a birthing clinic in a small community that is three hours away from the hospital. And to date, she had brought life to more than 2,000 babies. And microfinance has been critical in expanding and sustaining her birthing clinic. And as a response to the lack of trust and lack of awareness, we have been, like many other countries, we have been investing on financial literacy, although we have been redesigning our approach in such a way that it will be more sustainable. Before, we have been doing these financial literacy roadshows to go to the provinces, but this is not sustainable. It's resource intensive. So we're now focusing on leveraging on strategic partnerships with stakeholders who can do multiplier effects so that it will be more sustainable. And we're also focusing on digital content creation.
Very interesting. At $2 less to open an account, that's pretty good availability. Jamie, could I turn to you? How does your experience compare in terms of best practices in driving youth financial inclusion?
Thank you. So when thinking about best practices and I'm thinking about technology and its use, I really want to emphasize that tech is a tool, a really incredible tool, but really just a tool that we can use to remove the roadblocks that we're seeing in the way to youth basically just being able to see and achieve their dreams. And I think that one thing that I've learned over the years, both working on the supply and the policy side, but also on the demand side, is that we can't really optimally leverage the tools that we have, as incredible as they are, if we aren't including youth in the dialogue, and we're not listening to what their needs are and what their dreams are and what the barriers are for them to actually achieve those dreams. And so I want to commend AFI because we actually have several youth on this panel and representatives of youth, and we're here listening, I hope, to what you have to say. And so just a big congratulations, because for many years it's been a lot of assumptions without really hearing. So what I've heard and what I've seen over the years is what youth really want is to be able to use financial services to have agency, their own empowered agency to make decisions about where they're headed in their lives and to be able to see a future that's what they dream. And I think that really means safe and fair access to both to capital and to resources, access to information to support decision making in their economic life, access to tools that not only help them to manage the resources that they have, but to also help them thrive in whatever way that means to him. And so technology can really close those access gaps. It can bring these services closer and resources closer by literally physical proximity, but also by connecting youth to the more suitable products and services like digital credit that is a more convenient and sometimes less collateral intensive way to access credit for entrepreneurs, like savings and similar. Also connecting them with platforms and networks to make payments, to receive payments, to sell goods and services when they're moving into that world. And one of the reasons why youth is it's such a compelling market for this is that youth are the early adopters of technology. They know the technology, they learn it faster than anybody else, and also youth are also in a cognitive space in their life where their behaviors are still forming, their habits are still forming. To include them early is to make an investment in their ability to really thrive and really be economic actors over the long term. So it's really important to think about those access gaps and to bring youth in. And so just to, when I think about this and I think about what technology can do, I'm also often quite disappointed because I think it's not yet doing that. We're not yet using it in the way that it can be used to achieve those goals. So I went just yesterday and pulled some data from the Global Findex 2017 and was looking at youth financial inclusion data. And we have made some progress. There globally, 53% of youth 15 to 24, by that definition, have an account, and that is up from 47% the last time. But by most other measures, we're falling pretty far short. And even that 53% is a huge gap relative to global adult financial inclusion, which is sitting closer to 70%. So just a few quick things I'll throw out and then I'll pause. Borrowing among youth is extremely high. It's the service that's used more than anything else. It's up to 44% in sub-Saharan Africa. The frequent borrowing is happening among youth. At the same time, savings is going down. It's down 5% in low and middle income countries from 2014 to 2017. Only 30% or so have used a digital tool to make or receive a payment. And perhaps what's even the most concerning stat for me is that globally, 46% of youth 15 to 24 say that they could not come up with funds in the case of an emergency. That's the highest percentage of any of the stats in the entire Findex for youth is 46%, and in sub-Saharan Africa that was 55%. And there's no gender disaggregation, sex disaggregation of the data within the Global Findex, but I would wager a pretty significant bet that if you actually looked at females versus male youth across all of this data, that you would find much bigger gaps for young women and adolescent girls than you would for men. And so, I think that even though there's all this promise of technology, there's a lot going on, there's really clearly something that is also missing. And so technology can do so much, but why has it not achieved its goals? And is it that we're not listening to youth and building the products and services they need? Or is it something much more fundamental in the rules that are put in place and the laws that prohibit youth from being able to access accounts at a certain age? Is it Is it something else? And so I think that we need to take a really fundamental look at the gaps that exist, and thinking about what the Honorable Governor said. You know, if we're not including youth today, we are absolutely leaving them behind in the digital era. And so we really need to start taking this really seriously, and it might be more than just access alone that we need to be thinking about.
More than just access. Martin, you've been building new services and solutions for the youth. Can you describe some of those innovations that you've brought to the market for us?
Thanks. For us, I think this is a case very close to our hearts. So we are looking at Africa today. It's expecting to double its population in the next 30 years. Over 50% of its population are young generation. And we have heard the challenges, lack of collateral, no savings, poor onboarding processes. Banks are not creating products that are catered for this generation. We are building platforms, and specifically we are building two platforms focusing on youth and women. So on the side of youth, we have a digital marketplace called Fundi 24/7, which brings together technicians, customers, and suppliers, and to address some of these challenges. If I'm looking for a technician, I should get somebody who's vetted, who's verified, with national ID and all these things. We can address some of that trust issue. When we are looking at the whole process of record bookkeeping and what is missing in their history, those are the things that we are trying to build in our platforms. The whole purpose is to de-risk some of these problems. So we are not here to replace banks or MNOs. We are here to complement, let them do what they do best, which is the core banking piece, but bring the partners on our platforms where we can issue digital financial services, where we can offer financial literacy, where we can offer entrepreneurship skills, training, and things of that nature. And along the way, we believe that it's not just an issue of financial inclusion. There is also a business case in this, and we can build scalable solutions that can address some of these challenges that we are facing today. Similarly, on the women's side, we have a platform called SoConnect, which is primarily doing the same things, but now we are looking at the street food vendors. Mostly are women. They are serving food, and they are selling their daily business at almost a throwaway price. So we, through the research that recently concluded and with support of FSDT Tanzania, we have just realized one of the biggest challenges that these women have is record keeping. They do not understand how to run their businesses. So now on our platform, what we will be doing is provide them with that mechanism to keep their record from a daily basis all the way up to the full year, understand their business, then we can start bringing them the digital financial services we are talking about, the saving products, the credit products, the insurance, and there's so many use cases that can help these two groups to achieve what they want to achieve.
So you mentioned credit, insurance, and Jamie, you mentioned borrowing as well. It seems to be a central theme. From the regulatory perspective, Manat, what controls do you look to put in place to protect youth from potential abusive practices?
Okay, so I think we can look at it for example, per product. So if you're looking at the savings product, we're seeing that there's not much risk as compared to offering of credit, and because in credit there will be the risk of offering indebtedness. In terms of payment products, there's also that risk that may expose the youth to inappropriate content. So for example, if you have this credit card or debit card, you might be able to use it to buy something illegal or to buy something inappropriate to your age. So we must also be cautious of that kind of risk to be engaged in risky behaviors for the youth. So I think for the risk on cybersecurity, data privacy, disclosure, and transparency, on the part of the regulator, there should be a comprehensive financial consumer protection framework that will set standards for financial institutions to follow. And then on the part of financial institution, they should be able to follow these standards and be responsive and responsible in the delivery of financial services. And then on the part of the consumers, of course, they should also do their part because consumer protection is a shared responsibility among the regulators, the financial service providers, and the users themselves.
Thank you. There's a requirement for controls to protect them, yet our youth tend to think of themselves as digital natives. Ariane, you've been working with education of these folks as well. What is your experience of how they view controls placed on their access and usage rights?
Great. So in terms of digital financial literacy, so what I would highly recommend is now identifying and supporting effective initiatives that are in this sector, and then make the youth also responsible of creating these solutions that will enable them to be financially included.
Jean-Baptiste, you're looking to drive financial inclusion. Anything to add to that?
Thank you very much. When we talk about financial inclusion to that category, we want to optimize the capacity of the youth. We know in the perspective of the sector of agriculture and other subsectors in it, we know that almost 60% of global arable land is in Africa, and that is an opportunity to optimize on the capacity that can be brought by the youth, but who are still lacking some financial means. Financial literacy, first of all, could be going together with the use of technology, because we know most of the youth are now interacting with mobile phones and other types of technologies that could speed up the access to information. And also, those kind of training and capacity development could go through the use of mobile phone and other technologies. But again, there is a need to look at the practices. The thing is not to talk about it, but how do we go, how do we move? Because youth need to be trusted. They must be trusted, and credit itself means to trust. Youth must be trusted, they must be invested in, and they must be also followed up, because they need kind of mentorship or follow-up, but also empowerment continuously. And that will also go together with the transfer of responsibility. We know that if we trust they go to school, they have the capacity, why not transfer to them that responsibility to empower, encourage them to do something? And that goes together with some removals of different barriers, but also encouraging them as well to take some of the protective measures to put together to do some of the savings. That is what we are doing in different programs, including capacity building and access to finance with different partners we are working with. That is also helpful to make sure we attract many partners to understand the real life youth are living and attract their attention so that they can provide support accordingly. Thank you.
So is it simply the case that software developers should put out new services, test them, and see which ones get adopted, or are there specific areas that youth are really in need of? This is an open question for any of you.
So I don't think it's just about software developers should put out platforms out there. I honestly believe it should be a partnership, not only among service providers, but also regulators and policymakers in driving these solutions. So when we talk about regulators, if the regulators today do not understand some of these emerging technologies which are driving the development of these platforms, it will also be challenging for the developers to just put platforms out there. So, and we have seen most of regulators these days picking up interest in understanding some of these technologies, whether it's cloud computing, blockchain, artificial intelligence, and data analytics. And I think that should be encouraged across the board. At the same time, the fintechs themselves, it's not just about them. We also have to understand that we need other partners. So whether it's banks, MNOs, training institutions, others who are playing in this space, we should develop things that will be inclusive to all of us. At the end of the day, we can't do everything. When it comes to, let's say, for example, financial literacy, we can provide the platform, but the content and everything else has to come from somebody else. So we should stick to our core strength, and I believe the fintech space is really to reduce the gaps that are there. When you talk about banks, they do not understand the youth and its market. We can help them with the data that is missing. Through the phones we have today and the internet connectivity and the reach that we can get, we can provide them a lot of information that will drive their decision making.
So you're recommending strong engagement between regulators and technology firms?
Totally.
Would you, do you have examples of this in the Philippines?
Yes, in the Philippines, there's a close coordination between regulators and the fintech firms, and we have this what we call a test and approach, wherein if you have this innovation, you can come to the central bank, and we can discuss and set the parameters for the pilot testing, so that if it is found to be effective, then we can amend the regulation to accommodate such kind of fintech.
Very good. Jamie, I wanted to come back to you on some of the points that you've raised about the risks that these tools that we all carry around in our pockets pose. How can we do a better job of ensuring services that are launched are good quality, legal, safe, and non-abusive?
Well, I think we've covered a lot with the partnership between the providers and the regulators, and I think there's a lot we know about consumer risks in digital financial services. How those manifest in the case of youth becomes really interesting. So there are problems with lack of adequate recourse as well as inadequate disclosure. So do you know what you're getting into? Do you know when you get the notices to prompt you to take digital credit, what the terms and conditions actually are? But then also, when something goes wrong, is there a place to go in order to solve those problems? And a lot of times, it's not clear where to go, and even if there is a place to go, whether it's going to be effective or not. So really thinking about even using technology for the purposes of collecting data, of monitoring, of recourse mechanisms. The regulators can also use the same technology that is being used to enable access in order to protect, in order to provide a foundation that would allow youth to be able to trust that the services that they're using or the platforms that they're on, the providers that they're interacting with, are ones that are going to provide them with safe, responsible, suitable types of products and services. And so I do think it's a two-way street, maybe a three-way street, if you include the youth themselves and their own personal responsibility. But it's the providers and the regulators that have responsibility for mitigating consumer risks. And it's really important for actually, I think, enabling and encouraging youth financial inclusion, that it's not just seen as a way to protect. When you reduce the amount of risks that are perceived in using different types of products and services, then it actually increases trust and increases confidence in the use of them. And so then you're actually going to have a much more robust base within the youth population to use the services, because they're actually going to be more compelled to trust that they're not there to manipulate them, or to, if something goes wrong, that they won't be able to resolve it. So I think it's actually an all hands on deck approach when it comes to youth, especially because they are technically a protected class under the UN. They are more vulnerable, and so that's just something that we have to all bear in mind when we're thinking about what we're doing to both enable and encourage their empowerment.
Anyone else things to add on that? Please, Ariane.
Yes, so, one thing I would like to add on is to emphasize what my fellow speakers have been saying in terms of financial institutions, getting to understand the needs of youth, and by understanding the needs of youth and providing solutions that are in line with what they really need. So a few years ago, a friend of mine had a business idea and went to a bank and have given the business, proposals showing how the business will be operating, and luckily the bank accepted that proposal and he got the loan. But then the business didn't go well, like in terms of how my friend planned. And he was really struggling to also change the model, getting more clients. And then after he just realized that he would be paying the triple of the money that he was supposed to be paying. And he was very surprised because he didn't know this before. So, and I'm just saying that in terms of, being a financial institution, not just only supporting like grown business, but also having some rules and regulations that supports also young people to start their own business. And this will also bring me to the last point on youth also responsibilities to seek for opportunities to advance their financial literacy skills, and for them to also seek information regarding any financial services they're now looking for, and also understand the rules, the fees and penalties, and this will also permit them to manage well their well-being financially.
Yes, managing financial well-being. When we look at what technology can bring, then certainly one of the things that comes to my mind is when we look at youth, they are almost always lacking in credit history. They typically do not have long experience of using financial services. One of the areas that I've been impressed with is companies that are looking at alternative credit scoring to drive financial inclusion, and using individuals' mobile data to provide an alternative mechanism aside from traditional credit scoring. And this would help, I believe, to provide greater financial inclusion and offering people methods for borrowing that can come from traditional providers, but would require data coming from the technology sector. Martin, I know that you've been working on new solutions. Do you have experience on this?
Yeah, so I'll give an example. In our Fundi 24/7 platform, what we have done is we have enabled electronic payments. So we encourage the technicians to have a bank account or a mobile money wallet onboarded into our platform, and that way they can receive payments electronically. What we do with our data is just to, apart from record keeping for themselves, is to build analytics model behind it and show a proof that actually these people have income, they are credible because we verify them through national ID, they are trustworthy because customers rate them, leave reviews, and everything else. It's very common in many of African markets. You engage a technician, they come to you, they tell you, I can fix this, but I don't have money, can you please issue me an advance? And I shouldn't be taking the liability as a customer, because what if something goes wrong? So for us, we say, encourage your customers to pay you electronically. We'll keep your records. Then after a few months of consistent record, we can bring a bank, we can bring an MNO, a microfinance, to issue that credit, to issue that advance that you need as a working capital to get through by the week. At the end of the day, we can prove that you've earned some amount consistent. And then that opens up so many other use cases that you can think of. You talk about microinsurance. You talk about suppliers who are selling materials. You're talking about other guys who can rent equipment to these technicians. All of a sudden, this person is credible and can be served by different partners. And we don't have to do it ourselves on a platform. We bring partners who can serve. And all of a sudden, instead of one technician, you can look at them as a small business which can hire 2, 3, 4, and over a period of time they will grow. So when we talk about youth unemployment, this could be potentially one of the solutions. Of course, we are not naive, and we understand, as other panels have mentioned, there's issues around consumer protection, data privacy, and all these things. And that's when, as much as we have to be responsible as software developers, we also need to work closely with regulators and other policymakers to make sure these risks are addressed way up front.
So it sounds like you could almost set up some type of virtual loop in terms of better access to devices, providing better access to finance, providing improved usage of those devices, and young entrepreneurs then setting up businesses that would create new technologies and new solutions, again furthering economic growth in these segments driven by youth. The key for all of this is clearly going to be education. And Arian, I'd like to come back to you on this one again. How important and how interested are youth in STEM issues and educational aspects?
So in terms of STEM, I think youth are very interested in this when it comes to solutions that will enable them to ease their lives in many different ways. This is something that youth can easily embrace in terms of technology that will also allow them to learn different things and also have access to different knowledge. So this is something that youth embrace easily, and that is also highly recommendable.
Thank you. I believe we have some questions from the floor. I'm happy to open up the discussion.
Hello. My name is Jonathan, and I have a quick comment and question. My comment is about advocacy, about teaching in regards to mobile lending apps, about the fact that formal financial institutions do not consider credit history of the youth on these banking apps when they go to get loans. And so maybe it would be a good thing to central banks to try and regulate these banks to consider this history, because many youth in some countries do use these mobile lending apps, especially in their early 20s there. Also, the second was my question to any of the panelists is, what is being done in terms of financial literacy about teaching the youth to build a good credit score history? What is being done?
Thank you. Jean-Baptiste?
Thank you. I can quickly provide an example on the side of the question about what is being done to save the credit history of the youth when they are in business. As part of the Rwanda Youth in Agribusiness Forum's project, we have created a shop that is a common place, a food store, where young people are selling their food products. And we are now attracting the banks and agreeing with them on considering the financial record of every business's bank account, because every week we are making deposits to their bank accounts depending on their sales. And we are requesting the banks to consider those transactions that are those deposits from the business, those business sales, and to issue the loan because the business is already operating, they are selling, what they need is to scale up. That is why we started that model as a pilot phase to attract at least many young people to go in that line and reduce the risk of not having collateral to access finance. But also, those banks, which is good in Rwandan cases, is that they, on the loans that they are willing to provide, is also a part of a certain percentage to provide the financial literacy so that they can reduce the risk of investing in some businesses that the owners does not have at least the capacity or the understanding on the use of money. That is what is being done on our case. Thank you.
Yeah, I also know of an example from one of the partners in our network, a company called Wave Money, operating out of Myanmar. They've actually created some apps and games on their service to help educate women and youth on financial services products, insurance, and teaching concepts about credit worthiness and the like. So certainly there are initiatives addressing this important requirement. Can I take the next question, please? Please. The microphone's coming.
Thank you very much for that brilliant discussion. My question goes to the panelists from the Central Bank of Philippines, and possibly any other comment can come from the other panelists. Now, when we look at inclusion, especially looking at the digital financial inclusion for the youth, I'm wondering, considering that there are a number of competing innovations out there, for example, I'm looking at a youth opening their gadget and going past Facebook, YouTube, Twitter, and scrolling down to the financial information that we are talking about. So the question is, what are some of the interventions put out there to make these products more attractive to the youth compared to what they actually look out for when they access their digital gadgets? Then the second question is about the typical youth in rural areas. There is a category of youth located in rural areas and in the informal sector of our economies who in the first place may not be able to have access to digital gadgets and the like. What are some of the interventions that can be put in place to enable them to have access and therefore use these digital interventions? Then finally, I would like to concur with the previous question about the issues to do with financial literacy. Now, when you look at a typical youth, given the age bracket and the fact that they hardly know any of these financial issues, down to the basic issues of planning for their personal finances. So much as we may be looking at aspects to do with access to credit, etc., these young people do not have basic information on how to possibly, for example, factors to consider even before you get the credit in the first place. And without these, they are not actually empowered to make sound financial decisions as they access these interventions. So I would like to know some of the aspects that could be considered, and possibly would I be right to look at all this and have financial literacy as indeed a foundation for the youth to be able to transition into a better understanding of how to use all the proposals and innovations that may be put out there? Thank you.
Thank you for the 3 questions.
I can take the last one. So, example now, on the financial literacy, we understand the importance of making sure we don't expose the technicians to the services when they are not literate about what they're getting into. So we have levels in our platform. When you come in, you're just a basic technician, but you move up to become a silver, gold, platinum. And along the way, we make sure we provide that financial literacy to you. Once you've been trained, you understand all these things and their impact. That's the only way, or that's the only time when we can expose you to financial service providers and allow you to access these credit services. So by that time, we have addressed this issue. Of course, people can still be responsible, and it has to be a two-way street that you get punished for being irresponsible.
Yeah, if I may. On the question about how to make the access to finance attractive for the youth, leveraging on social media like Facebook, admittedly, yes, the youth sector are the heavy users of Facebook and other social media. So what the central bank did is we leverage on the social media as a platform to deliver financial literacy messages. So we have we created this dedicated Facebook page to deliver financial literacy messages to netizens, especially the millennials. Then on access to youth in rural areas, yeah, I think that's I would like to relate this to Jean, who is involved in the agri sector, because in the Philippines, agri sector is also one of the sectors that, most underserved. And the average age of a farmer is, 57 years old, and it is estimated that in 15 years there'll be a critical shortage of farmers in the Philippines. And it's because the farmers are also not encouraging their children to engage in agriculture. But technology actually provides an opportunity for the youth to be engaged in agriculture without actually getting their hands dirty. So I'm reminded now of a crowdfunding platform in the Philippines developed by college graduates who saw the gap between demand of farmers and that these banks are not lending to the farmers. So they developed this online platform to be able to pull funds from the public and then relend these to the farmers. And then on financial literacy, what we're doing now is, I think it should be institutionalized. It's not just, conducting ad hoc roadshows. It should be institutionalized. And I think on the part of AFI members, many have gains in terms of cooperating with the Ministry of Education so that it's part of the curriculum.
Perfect.
And I would, just a quick comment on my end, and it's that I think that we can give the youth a little more credit. And I don't mean actual credit from a credit line. Like, give them credit that they actually do know a lot more than than I think was kind of indicated in the question. And I think that financial literacy is an important thing, but also knowing what you want to achieve and having goals and feeling like you can actually achieve your goals is a really great pathway for learning about what tools you need and how to leverage them to get there. And so, youth, are borrowing, they are saving, they are not unaware of the fact that money exists in this world and that they need to use it in order to achieve the goals that they have in their lives and be empowered. And so I think that really there's a little bit of trust. We're trying to have them build trust in the products and the services, and I think that we also, in as much as we need to protect them from risks and vulnerabilities, we also need to trust their ingenuity and trust the kind of audacity that they have to have a vision for what their future is going to be and how they want to achieve it. So I think that maybe there's, if we start with they can't be trusted to know what to do or how to leverage the services, then we're really not ready to listen. And if we're not listening, we're not going to achieve our goals.
Thank you, Jamie. We might have time for one last question. Here comes the microphone.
Thank you to the panelists for a good presentation. Referring to the point made earlier by Governor John Wangomga, on creating opportunities for income generation. I think there is an aspect of technology maybe we haven't really discussed enough about, which is, and this is my challenge to the panel, if you can really make a comment or discuss this, how we can really leverage on technology to increase opportunities for job opportunities for the youth. Like we have here an example of youth in agriculture. Is there any other way we can leverage it in other sectors, in rural areas, really to make those not so popular sectors more attractive to the youth? Can that help in their financial inclusion? It's just a provocative question for you to maybe comment on or discuss. Thank you.
So how technology can drive increased job opportunities in rural areas, yes? I'm looking at you, Jean-Baptiste.
Thank you, Mr. Governor. Normally, job creation is the only pillar that any economy can rely on. It means as policymakers, as regulators, as the government, their job would be to really go with time. What is new? Where youth want to venture? What is attractive to the youth? And it is that it does not really consider it is urban or rural area. It goes with time. What is attractive to the youth? Now we are talking about agriculture, but it's not only agriculture as a primary production. We are talking about value addition. We are talking about inputs, making and supply. We are talking about marketing services. We are talking about extension service delivery, using the mobile phone, using the available technologies. We are talking about intensified climate resilience technologies. That would be even attractive to the youth. And you will find most of the technology, most of the fields in the economy would be at least feeding within agriculture and agribusiness sectors. Now, when you look at the agriculture itself, it needs other infrastructures. It needs packaging materials. That would be also another sector that is attractive. But how it becomes a business, there is a need for money. How it becomes a business, it becomes competitive because of innovation. That is why the only solution is about incubation programs, because we have different undertakings and initiatives that go from the primary school, secondary school, higher learning institutions, universities, and other technical and vocational training schools that look at identifying the potential ideas, the potential innovations held by the youth in their minds. How those innovations, how those potential ideas can be incubated and be transformed into selling businesses. That will go together with the empowerment that we were talking about. The financial part will be after to make them real businesses. But how do we at least help those ideas not to die on the way, but be transformed into businesses? That immediately will spur the rural area, because wherever we get it, it can be in rural, it can be in the urban, but when the ideas are not dying on the way, they are incubated into businesses, and together when we start talking about business, financial literacy will be a must. It's a pillar for any business to succeed, because we would not be getting back to the experience of the Ariane colleagues, because it would be again cutting short the image of the young people's capacity to drive the economy. Thank you.
Any other comments?
Just to echo what he said, I think the important part is to look at the complete value chain. So if you look at the complete value chain, you touch upon a lot of industries and a lot of activities, which eventually will create jobs.
Yes, certainly. I think all of the mobile money operators recognize that putting a financial instrument on a phone provides the ability for individuals in rural, less developed areas to get access to financial services that traditional bank branch networks just cannot reach. Population densities are probably so light that it's economically unfeasible to put traditional retail banking and financial institutions there. The growth of access to phones is key in terms of driving this. Stats from the GSMA, there's over 270 mobile money deployments live, more than 90 countries globally. Over 1 billion registered mobile money accounts, many of whom will be used by youth and females in rural areas, in less developed areas. I've been working in the phone and financial technology areas for nearly 10 years now, and it always makes me so proud of what the technology industries are doing in terms of providing better access to financial services. And as the governor of BOT said at the start, the youth is our future. And I think all of us on the stage are helping to drive access for youth and hopefully building a better future for many millions of people around the world. I thank you for your time and attention today. I thank the panelists. Thank you.
If we may give another round of applause to Mr. Stephen Vikers, who moderated this panel. If we would give another round of applause to Prof. Florence DMA Luonga, the Governor of the Bank of Tanzania, and our panelists, Mr. Maynard Mujika, Acting Deputy Director of the Philippines Central Bank, Mr. Hategekimana Jean-Baptiste, the President of the Rwanda Youth in Agribusiness Forum, Ms. Jamie Zimmerman, the Senior Program Officer of the Bill and Melinda Gates Foundation, Ms. Ariane Muringa, co-founder of Starlight Africa, and finally, Mr. Martin Marioba, the Managing Partner of WS Technology. Ladies and gentlemen, I would like to ask that you give a round of applause to yourselves for being attentive this afternoon. Yes, right now we're going to have our coffee break for more networking, but I would like to remind you some of our housekeeping rules. Again, we have our gala dinner at 7 p.m. and it's going to be at the Kigali Cultural Village. Shuttle service will be every 10 minutes, starting from 6:30 downstairs, and the VIPs have their specific vehicles that will pick and drop them there. While we go for our coffee break, I would like to invite the Maya and AFI data portal focal points to join the coffee break team at the exhibition area. Enjoy your coffee break, then we'll be coming back for another exciting session where we will receive innovators, 10 innovators pitching their ideas at the AFI FinTech Showcase. Please do not miss this upcoming last session for the day. Thank you.